So SPY's put in a new all-time high yesterday at above 250. Here's kind of what it looks like. So we had that big reversal on August 8th, so we're a little bit over a month later. A couple of times we tested the mid to low 240s. Spent a few days here consolidating back in the early August. Consolidation, late July consolidation, and then the gap up in the break from 248 a couple of days ago and closed above 249 and had some follow through there yesterday. So it looks like we could be setting up a new range here. $49.30 was the high. Monday. 250, the big psych level. Okay, so it looks like yesterday, right on the open, we ticked up. We failed. We came through 249.5. People were looking to buy into this prior day's high, but very quickly we didn't even get there. Very quickly got back above the half, made the new high. This is a little nasty.
Canada TRP.
This is a little Apple stuff going on here.
10-year paper.
Right. I'm just looking at yesterday afternoon pullback right before that. The sprint buying into the close. The new all-time closing high was 249.65-ish. And we touched it here in the pre-market as well. So I don't think I'd make a trade there, but I want to watch and see if people step in right there. I'm curious to see if we can hold above 250 on the open. Now IWM, small caps are behind again. Here was our high up here, 143.40, 144. Came off that $10 from late July to late August. $41.80. This is kind of the next interesting bands here on IWM. Natural supply band resistance. And this one dropped out right on the open yesterday, touched the prior day's resistance, and was bought there pretty cleanly. So the high of the prior day was 140.90, touched it in the afternoon. They spiked it there right on the open before waiting to buy it quickly above 141 and a slow grind to the mid 141s. So that's worth keeping an eye on. Have an alert down here at 141, 141 to 140.80 to see if that acts as a new high or low. Any type of consolidation above 141.60, if it breaks to the upside, we can watch and see if that can push it to 142. So have an alert at about 141.55. All right, FOLD. So this one, unusual price action here, and I'm guessing they have another drug. So this had been strong recently. Had run up from over $10, gap up on news. I think we talked about it this day here. Got sold. Even tried to fill the gap here back on August 11th and was consolidating at the high. So I think this is just rallying up here for whatever those phase 3 trials that failed. was not the catalyst that was causing this up move here and this actually make a new high. So people use this opportunity to kind of scoop it up below $12. So I'm kind of thinking it's unlikely that it's going to go back down there again today. And you see the headline and you see failed phase 3, you think the stock should be going down, but clearly not the phase 3 that mattered. We know that it had another catalyst that recently caused it to go from $10 to $13. So now that this, buy the dip here is enough to have it go up below 12 and push it back up into the 13s. I don't know if that's enough to push it through recent supply here at $14. 13.80 to 14. And again, it looks like it bounced up to this region up here. So it got up here. So you can see when it first got there, clearly people were selling it at 80 cents. Had a small pullback, went up to the next, kind of the top of the resistance zone, then came back down below. And when they do, it started to hold below there. That's what some people like to call a head and shoulder pattern. People look at this on every time frame. But it's just showing you that, a stock moves up to a supply area. There's still buyers there. They push through, but the buyers that push through, they're just not willing to commit above the supply area, and it comes back down, it holds, and then people jump in on the momentum on the downside. So this looks like maybe it'll have a little bit of a push down to here. But again, I think it's unlikely that it comes back down to this area here. Playing it against this 1380 to 14 resistance makes sense. I think buying it into a dip below 13 into 1280 makes sense. So those are the two things I'm looking at. JWM, they're going to go private, looks like. Let's take a look at the daily. I'm amazed at who's going to invest in a broad-based department store in this market environment where they've been the #1 recipients of Amazon's wrath for the last couple of years. So this had trended up nicely from 40 to 80. Got killed with the rest of retail in the last year. And put in a bottom, then put in a higher low here at 40. Another higher low here at 43. I think we've talked about it a couple of times on some of these gap ups into this area here, maybe even here. But the news flow is pretty good from them. They're doing pretty well. So maybe that's why they're able to kind of raise the billions they need to kind of finance going private. If you look at it and you say, okay, it's been in the mid-40s, where's a likely price that it could go private? I don't think above 54. People might be thinking in this area here. It's gapping up to 47.5 right now, which is above this recent high. Okay, so 50 natural resistance. I mean, I'd be a buyer of it down here. From 47, you're probably looking at a 10% plus premium to get this deal done to go private. News flow risk that during the day something comes out where they say they're not going to get a deal done, but you have to stop for that. The other possible risk is it gets halted. Hopefully they would only halt it if there was a deal, and you'd be rewarded with some type of gap back above $50. There's some risk there creating it in terms of halt risk. And one of the biggest risks in short-term trading is halt risk, because we can't control our risk when something's halted. We can't get out of it, whether we're short or long. So initial move, breaking lower here. Yeah, I mean, I guess I'm going to look. I'd look to buy it into here. If I can't get it down here, then I would look to see if it starts to hold back above 48 and play it for a move back up to 49.30. Let's see, right here where it had trouble after the initial high. Finish line, FINL. So FINL, we talked about when it gapped down to $7 a couple of weeks ago, and apparently got down to a low enough price where the bottom fishers came in. They liked the underlying value there. So you can see that was 75% from the high. And actually got to our support area. It did bounce from there and slowly has been grinding higher since then. And it caught an upgrade today. So God bless. I'm not sure why they couldn't upgrade it, when it was down here at 8. Doing their clients a little bit of a disservice. But in these things, we know if it's a longer-term bottom, in the terms of the longer-term bottoms, a lot of times they will double. I mean, the first thing is they go 50% off the bottom, which it's done that already. We've talked about this many times in the morning meeting. Beating down names, they'll go. The first move is like 50% off the bottom, and a lot of them will double, which brings it back up to here, basically to this, fills this gap here, 1350. Not that the analyst who upgraded today is thinking about that. But for today, for short term, this area here, this potential failure area right here, 1050 to kind of 1070. What did I put on the sheet? I put 1065. So 1065 is the spot to look at it to see if it fails right there. If we got through it, I think 11 is probably best case scenario for today if people went really crazy buying it. In longer term, if the buyers stay in control, it's going to work its way back up to here. And that'll be about a 50% down move from the top. PTLA, they just priced a secondary, so I just wanted to bring this to your attention in case they, and it's at 55. That's where they did the secondary. So yeah, I would just look for the flush through 55 on the open. It'll most likely do. We've had a lot of success with these secondary buys in the last year. I think all of them have worked. So most of them have flushed through the secondary price. Now, yesterday gap down probably was people didn't know where it was going to be priced. They probably heard rumors that it was going to be priced low, and they stepped in and bought it and pushed it all the way back up to 57. Be a little bit conservative here. Try to buy it maybe closer to 54 and a half. I imagine they'll step back in at some point and push it up into this area here. WDC. So the news wasn't clear. I wasn't around yesterday, but I threw this on the morning sheet for you guys to look at. The news that I saw, the story was they're selling this unit. Now it turns out that, so remember they merged with SanDisk SNDK, and the unit that was being sold was part of a joint venture that SanDisk has with Toshiba for memory chips. Apparently, WDC did not approve of this, and according to their joint venture agreement with Toshiba, Toshiba is not allowed to actually sell without their approval. So that's why it's gapping down this morning. Legal fights, joint venture partners, disagreements, uncertainty, and that's causing that. So let's take a step back and look at the longer term. So we have, right where it's gapping to, we have this right here. Beneath that, put 84. I should put 85 as support. Yeah, I guess 85 is support here and here. It seemed like 85, 80-ish to me is maybe a bigger area than 85. And there's some room below that to 84. Let's see. Looks like right on the open they're going to use 86 as an inflection. I guess the way I look at it is if a quick flush on the open happens, then it bounces and gets back above 86, I would look for it to fill into this gap right here. If it goes down, pops back up and fails at 86, then I'll look for it to come into those support areas I just highlighted. Longer term, though, it's probably a buy on any type of multi-point extended weakness. And then you have Sage, which gapped down on negative, another biotech news yesterday, and it's another one, I guess, where they have other drugs, and had a really big bounce. I think on our sheet we had 73 as our top resistance, and just as a rule of thumb, if a stock, if we highlighted two potential resistance spots, it blew through 70 obviously, but if it gets through, if we have on the sheet a stock that's gapping down a lot, and on the opening drive it blows through the higher resistance level and then starts to hold above that, you want to be long that, because then you have gap fill potential. In this case, the gap was too big for it to fill, but it did go, it held 73 for a couple hours, and it did go another $4. So that's pretty good. And it never came back down and tested 73. And so we're just always thinking about our buyers in control or sellers in control. If we highlight two potential resistance areas when it's gapping down to 66, is 70 and 73, and the first drive takes it, almost to that, and then the second one puts it above, and then you see people just stepping in and holding that. You have about 50 cents of risk here getting long, and it ended up going up another $4 or four and change. Then it pulled back to kind of the morning resistance. It supported it, 74.5, supported it again. So I don't know if it's going to pull all the way back to that, but 76 is potential support, and then 74.5. Yeah, I guess I put 74.5, 75 on the sheet. So this area right here. So, I mean, this comes into play if it fails at yesterday's high, 77.5 here, then starts to come in, this potentially comes into play if it doesn't support 76. So, yeah, not a lot of news flow. We're a month away from earnings season now. So it's going to be, each day there might be, 1 to 3 things that are very in play. And that's good. You can be focused, there are more people focused on those names. So hopefully people are willing to step in at the inflection points you identify, and you can make good risk reward trades off of those points. But don't be selective. Sometimes when there's not a lot going on, you force too many things, and you don't want to do that. You want to just let it come to you. You only need a few good trades in a day to have a really nice day. As always, be patient.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important, and how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.